Now, the tax status of municipal bond interest. When we talk about it, we look at the interest as being exempt from federal tax. Now, if you're in the 20% tax bracket, you buy 10% corporate. What's the equivalent tax free? That is the municipal yield. Well, you're going to be getting $100 of interest, but you're taxed $20. Your after tax return would be $80. And thus, buying an 8% muni is the same thing as buying a 10% corporate, given that you're in the 20% tax bracket. To find the muni yield, you multiply muni multiply. So that's the tax-free yield. And putting in the numbers, your taxable yield being 10%, your tax bracket being 20. If you multiply 10% times 80%, that's going to prove buying an 8% muni is the same thing as buying a 10% corporate, again, given that you're in the 20% tax bracket. To find the corporate, that is the equivalent taxable yield, you divide. So your tax-free yield being 8%, tax bracket 28% divided by 80% proves buying a 10% corporate is the same thing as buying an 8% muni, given that you're in the 20% tax bracket.